Hi, I'm Tom Elliot and welcome to this pre-election financial markets update for Hodges Real Estate. Now, although the election is the main thought in everybody's minds at the moment, it is worth casting our minds overseas and locally to look at the state of the global economy. Now, firstly, in the United States, there's a lot of concern that America might intervene militarily against Syria. However, I do not believe that if such a thing is done, it will be anything major. There will not be troops on the ground. And you know what? A reading of history suggests that every time the US does get involved in a war, the share market at least actually goes up. So bad news if you live in Syria, possibly good news if you're a financial market investor. The US economy continues to produce new jobs. Probably the biggest fear that financial markets have at the moment is when the US Federal Reserve will start tapering, which is a rather complicated way of saying when will they stop printing money. One of the reasons, of course, the Australian dollar has dropped so much in the last few months from around about $1.10 US down to lows of just below 90 US cents is because the US dollar is rising because the US Fed is not printing as many US dollars as was once the case. The European economy is still very weak, but as I've said many times in this forum, we already know that. There's no surprises there out of Europe. Governments there appear wedded to their austerity plans of increased taxes and lower spending, and it's very hard to see any real growth emerging out of Europe anytime soon. And on a more positive note, things in China actually look quite good. Now, I only say this because you do hear all sorts of weird stories coming out of China about ghost cities and whether or not more very fast train projects will go ahead and so forth. But the reality is there's continued strength in commodity markets, in particular the iron ore price, reflect the confidence that global financial investors have in growth in the Chinese economy. So what about Australia? Well, Chris Bowen, the newly anointed Treasurer, of course the successor to Wayne Swan, had his mid-year economic update recently, or the pre-budget one, and he has warned of lower growth. Australian growth will only be now around 2.5% for the next couple of years, and of course allied with this will be higher unemployment. That's been lifted as a forecast from 5.75 up to around 6.25%. This isn't great news, but remember, these are just forecasts, and Treasury has a terrible track record of getting these sorts of things right. Speaking of the election, of course, if the coalition wins, and the opinion polls at the moment are saying that's exactly what will happen, typically there is a modest but positive reaction on financial markets post a coalition win. Local interest rates, well, I think that the Reserve Bank will have looked at the new Treasurer's economic forecasts with some scepticism, but at the same time, interest rates I think will still be cut from 2.5% to 2.25% before Christmas. Again, though, as I've said many times, the fixed rate markets are already pricing in this cut and one or two more. So the fixed rate markets are giving you 2 or 3 interest rate cuts from this point in time. Consumer sentiment in Australia remains weak, and it's very, very hard to see that changing before the election. And I think even after the election, people aren't going to be spending as much money as they could. Okay, so if the coalition wins the election, what does this mean? Well, firstly, and Tony Abbott has said this many times, so it must be true, the carbon tax will be abolished. Curiously though, all the compensation put in place for the carbon tax will remain in place, so that is going to make the federal budget deficit very, very hard to get back into surplus. The company tax rate will be cut to 28.5% from 30%. However, if you're one of the biggest 3,200 companies in Australia, the cut will be immediately reversed because you'll be paying the paid parental leave levy of 1.5%. And for people living off their private superannuation funds out there, this is a bit of a problem because that paid parental leave levy will not be franked. So as a result, over time, the franking credits on your dividends could be reduced from 30 to 28.5%. The public service, Joe Hockey's promised to cut that by around at least 12,000 people. He does say via natural attrition, but if that natural attrition isn't fast enough, I think there will be cuts in Canberra, and I have to say I would not be a property buyer in Canberra at this point in time. And finally, the National Broadband Network, Malcolm Turnbull's version, which is the coalition's version, will be built at least 2 years more quickly than the government's. However, it will not be as fast as that promised by the Labor Party. So what does all this mean for property? Well, Melbourne property prices in particular have shrugged off any nervousness about the global economy, the local economy, the election or anything else. Clearance rates are well above 75%. On some weekends they're hitting 80%, which is a sign of a rising market, and suggests that both investors and property buyers are very, very keen to get their hands on bricks and mortar. The weaker Australian dollar has also seen a return of overseas property buyers to the local market, particularly in the private school belt around the Kew area and of course Balwyn and those sort of inner to Middle Eastern suburbs. And let's remember, interest rates remain at historic lows, so people buying property at the moment are buying with the confidence of knowing that their financing costs aren't going to rise anytime soon. Well, as I said, the property market has already been very strong in recent recent weeks. A clear coalition win on September 7 won't do anything to dampen that confidence. There will be a lot more stock coming out during the traditional spring selling season, but from what I can tell, there is more than enough demand out there to soak up the excess stock. Thanks very much for your company, and I look forward to doing all this again after the September 7 federal election.